Tesla and Palantir stock are soaring in 2024, especially after presidential elections really created momentum in these two investments. And that's really what it is with these two. It's momentum driven because if you look at the fundamentals and valuation, these prices don't make sense for either of these two stocks. However, I know many of you are excited because of all the momentum in these two stocks and are considering these two for 2025 and trying to answer which one is the better one to buy for 2025. So that's what I'll answer in this video. I'll look at these two companies and their critical financial metrics, including revenue, cash flow, return on invested capital, and valuation to determine which one I think is the better buy for 2025.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Let's start with revenue and let's go back roughly 5 years because we don't have that much more data for Palantir. We have more data for Tesla, but I only wanted to go back enough time to compare with Palantir. And what you'll notice with Tesla since 2021, of course, 2021 was an unusual year, and 2020 and 2022 also because of the pandemic and there was supply chain shortages. And that benefited Tesla because other car companies couldn't make vehicles. And so Tesla benefited because people looked at cars and said, well, what's available out there? Tesla had cars that were available and people were buying them. But since then, Tesla's growth rate has slowed down considerably. As you can see, I think investors are cheering that the company actually delivered 7% revenue growth in the most recent quarter. Palantir has a similar story. Its revenue growth was decelerating, but in recent quarters, it's actually accelerated its revenue growth significantly up to 30%. So much better, more than 3 times the revenue growth from Tesla in the most recent quarter. And in a lot of ways, Palantir is what Tesla wants to be, right? Tesla keeps talking about itself as an AI company. Well, Palantir is already an AI company. Tesla still generates more than 80% of its revenue and profit from car sales, from EV sales. But eventually it wants to become an AI company. Well, right now it wants to become an AI company because right now investors are enthusiastic about AI companies. So because it's popular, they want to sell that. They want to follow that theme because it gives them a higher valuation. If 5 years from now, electric vehicles become popular again, I wouldn't be surprised if the story reverses and they start talking about themselves as an EV company again. Whatever is making the valuation higher, I think that's what Tesla management will encourage investors to consider them as. The next thing I wanted to compare these two on is cash flow from operations to sales over a trailing 12-month period. Again, we see opposite directions here. We see Palantir improving meaningfully and Tesla again going backwards. It hit the peak around 2020 and 2021, again due to those supply chain shortages in competitors in ICE vehicles, which drew more buyers that were probably not really interested in electric vehicles, but because that's what was available, they went ahead and made the purchase. Nowadays, all car companies are producing full tilt, and that's driven down demand for electric vehicles. And you've seen that everywhere outside of China, EV sales are not doing that well. Cash flow from operations for Palantir at 37.6%, more than double that of Tesla at 14.9%. I expect this ratio to continue working in Palantir's favor for at least another few years, at least until or if Tesla ever launches that robo-taxi or driverless cars, then perhaps its cash flow from operations will return to increases, but that remains to be seen. Right now, I think its cash flow from operations are going to be challenged as the company continues to face tepid demand for electric vehicles and it starts to make its investments and build out the enthusiasm for the driverless vehicles. When measuring the return on invested capital, again, a similar story, Tesla going backwards and Palantir improving meaningfully up to 12.27% and Tesla's return on invested capital falling to 18.2%. Again, like with the other metrics, I would forecast Palantir's ROIC to continue improving while Tesla's ROIC continues to remain challenged. And the return on invested capital measures the profits, and the denominator is capital you're putting into the business. Tesla's going to be putting a lot more capital into the business over these next couple of years as it tries to develop that driverless car technology, as it tries to ramp that up. It's going to need significant investment in technology, in accelerated GPUs, building out those data centers, building out the compute infrastructure for that technology. The good news is that Tesla has paused expansion on manufacturing more vehicles, which I think is a very prudent thing to do. As I mentioned earlier, demand for electric vehicles everywhere outside of China is not growing by all that much. And Tesla has enough capacity to meet existing demand, and existing demand is not likely to increase by very much next year or even the year after that. And so I think that was a smart move not to expand manufacturing, at least not yet, not until there is some battery technology improvement that makes these cars make sense for more people other than just those that own their own home and can have charging at home. And finally, let's compare these two on valuation. And these are both very expensive stocks. Palantir is trading at a forward price to earnings of 153, and Tesla is trading at a forward price to earnings of 130. I've talked about how I feel each of these companies is overvalued. I've talked a lot about how I think Tesla stock is overvalued, Palantir as well. I've talked about how this is overvalued according to this metric, right? There's other ways to value a business, and let's look at one other way. So another way to value a business is by doing a discounted cash flow valuation model, and I've done that for Tesla and Palantir. And according to my estimates, Tesla's intrinsic value per share is $45. That's what I think a fair price would be for Tesla stock using the discounted cash flow valuation model. And this input includes a weighted average cost of capital of 17%, a long-term growth rate of 7%. Now, I've also done different scenarios to try and identify where the market feels Tesla is heading, right? What's the growth rate that justifies Tesla's current market price of $424 per share? And even if I utilized an 8% growth rate instead of 7, it would still be overvalued. Even if I almost doubled that to 15% long-term growth, that would bring Tesla's valuation up to $109 per share. So it would still be overvalued even if I were to double the long-term growth rate. So I would have to make several upward adjustments to this discounted cash flow valuation model to arrive at a conclusion that does not put Tesla at an overvalued status. And I've also done a discounted cash flow valuation for Palantir. And for Palantir, I also found it's overvalued using the intrinsic value per share in the DCF calculation, but a little bit less so. I find its intrinsic value per share at around $29, and the market price is $72. And I utilized a longer term growth rate of 16% for Palantir, and it still gave me this overvaluation for Palantir stock. I did this DCF for Palantir a little bit differently than I did with Tesla. Regardless, both of the outcomes came to the conclusion that these shares are overvalued, driven by a lot of enthusiasm and hype before the company delivers on those expectations. So I don't think these price increases have been justified by the fundamentals. They've only been justified if you're following momentum, if you're just following the momentum in the price increase. All right, so what's the answer? What's the conclusion? Which one of these two would I rather buy for 2025? Well, if you forced me to, I wouldn't want to buy either of these two at these valuations. But if you forced me to and I had to pick one, I would pick Palantir because at least this company is generating better cash flows, better revenue growth, better improvements in all of those critical metrics. And it's actually an artificial intelligence company generating all of its revenue and profit basically from AI capabilities, while Tesla is still generating roughly 80% of its business on EVs and EV profits, EV cash flows. So For those reasons, I would rather pick Palantir over Tesla.
Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.